Last year, in April 2025, our trade minister mentioned that we cannot totally rule out recession, and the Liberation Day in 2025 caused the market to tank drastically. And due to fear in the market, most people decided to sit out of the market, fearing recession and of course all the crazy news out there. But this is the important point. These people miss out on a 50% gain. And now in this year, people are asking the same questions again. Is this the time to be invested or not? So today we're going to answer this question. So first thing first, we can take a look at what happened last year. So like what I mentioned earlier, last year the trade minister posted an article and wrote something along the line saying that we cannot totally rule out recession because things are looking bad. And we think about what happened last year. Last year was the trade war that Donald Trump started. So he started with the Liberation Day. And Singapore cut our GDP forecast from 1 to 3% to 0 to 2%. And US decided to start a trade war with everybody and especially China. People were panicking, not knowing what will happen, fearing inflation and market tanked badly. So even if we look at the Singapore market tanked about 13% during April. And the SPY dropped about 17%, which is the US market. So things are looking gloomy and bad at the start of the year. But let's take a look at what happened at the end of the year in 2025. First thing, let's talk about the Singapore GDP. Singapore GDP hits about 4.8%. It's not even close to recession. And our own STI index also hit 5,000 points for the very first time. So the STI index was actually up by about 22%, excluding dividends. And the US market itself was up by about 15%, excluding dividend. But if you dive deep into the charts of what happened from April 2025 till the end of the year, you would have noticed that the Singapore stock market actually went up about 45%. And SPY went up by 52%. So what if fear shook you out of the market and you decided to stay out of the market from then till now? I think the opportunity cost is going to be drastic. So let's talk about what is happening right now in the market. So this year, I think it's the same thing. We started with a lot of negative news. The issues along the Straits of Hormuz is disrupting global oil supply. Oil prices hit above $100 per barrel. The US-Israel-Iran war, inflation concern, tech bubble, concerns with regards to the AI spending from the big techs. And Goldman Sachs came out and said that they are raising recession expectation to 30%. So I think right now what is happening is there are common concerns that we are seeing in the community. People are asking, are the crises going to last? But if you have been following the market, you would have seen that the recent price of the US stock market is at an all-time high. And now when the price is at an all-time high, people will be asking, right now is the price too high to buy in? So you think about it, sometimes it's very interesting. We are very fearful when the market goes down and we don't dare to buy in. But when the market goes up, you are also fearful because you're scared that the market prices are going to come down. Then in that manner, you will be actually stuck and not able to take any action. So for my own philosophy of investing, I will always participate in the market. And what actually really helps me a lot in staying invested is I ask myself this question. Do I believe that people and companies will continue to move the world forward? I'm not betting on a specific year. I'm betting on human civilization will continue to keep on progressing and things will become more expensive. And if I believe that things are going to become more expensive, I would want to be shareholders of these companies which are selling the goods rather than thinking, is the price right now good or is the price right now going to go down further? Because I believe that there is no way to predict what is going to happen in the future. But coming back to the first principle, understanding whether human progression will continue, it's going to be a much more simpler question to ask. And if we look at the history of the past 15 years, you would have noticed that even with all these crises and news that is happening, all-time highs has always been happening for the S&P 500. And I believe that it will continue to do so as long human progression does not stop. So back to the question, brand new crisis this year, continue to invest or not to invest? I think it is very personal and it depends on your current situation. And to make it simpler, I think it is easy to just break down into two scenarios. If you do have spare funds and your outlook is more than 10 years, just keep investing. You cannot time the market. You cannot fight the market progression. So keep your funds invested. And for the group that decided not to invest, it might be that you need the money for the next 3 years or 5 years. Those are the funds that should not even be invested in the first place, if you want to take a very defensive approach of preserving the funds. So that itself will make it very simple for you to come to a decision. Spare funds, keep invested, stay invested. Don't time the market to get in and get out of it. Because who can guess that last year, April, after the sharp dip, market recovered so fast. And it is the same this year, April 2026. Market have a sharp dip and also recovered in the V-shaped recovery. So I would love to find out more from you. With the current market scenario and situations happening, have you stopped investing or are you still invested? I would love to hear your opinion. And also, if you like videos like this, feel free to hit the like and subscribe button so that more videos like this will be recommended to you. So that will be all for today, and I'll see you in the next video.